So it's pretty horrible to see the events in Dubai and the Middle East, and I've had a lot of questions of people asking me if I'm going to trade oil. Now, I don't trade oil, and anyone who is going to trade an asset because they've seen it in the headlines at the time when it's its most volatile is the last time you want to be trading that asset. So there are going to be some absolute face-ripping moves on Monday and Tuesday. Equally, some people will make a lot of money. Sorry, a bit out of breath, I've just got out of the gym. But this idea that you could trade a first order consequence, like seeing it in the headlines, trading it and making a profit, is just an absolute fallacy, trading a first order effect like that, because there are people who are backed up to their eyeballs with money, with computers literally the size of your house, backed by the smartest minds on the planet. You are just not going to be able to make any money or generate alpha in a highly liquid and efficient market like that. Now, what you could do is a second order consequence. So let's say oil goes up, you might then think, okay, well, any oil companies that aren't hedged are basically going to see that money trickle down to the bottom line. Any airlines that haven't hedged, so their costs are going to go up, could you short them? Equally, you compare that with a long on a stronger airline who has hedged and won't be seeing any of that downside. Or you could go to third order consequence. So if this and that happens, but what is the effect of that? That is the only real way that you can make any money on these things, and you're usually looking at smaller, illiquid, inefficient assets. Personally, that is why I trade small caps.